So how did a company founded with the dream of revolutionizing finance become the epicenter of one of the most significant legal showdowns in financial technology history? And now that the dust is finally starting to settle, what does the outcome mean, not just for Ripple, but for the future of money, technology, and economic opportunity in our digital era? Let's rewind to the beginning. In the year 2012, two visionaries, Chris Larsen and Jed McCaleb, launched Ripple Labs with an audacious goal: to make money move around the world as seamlessly as information. Their breakthrough was the XRP ledger, a decentralized cryptographic network engineered to process transactions in seconds, rather than the days required by traditional banking systems. XRP, the digital asset at the heart of this system, was not designed to be just another cryptocurrency. Instead, it was conceived as a bridge currency, capable of facilitating instant, low-cost, and transparent international payments. At a time when sending money across borders could be expensive, slow, and opaque, sometimes taking up to 5 business days and incurring fees that ate into the paychecks of migrant workers or the bottom lines of businesses, Ripple's technology promised a radical alternative. Through RippleNet, Ripple created a global network connecting banks, payment providers, and remittance services. The vision was clear: enable real-time settlement, reduce costs, and bring financial inclusion to the unbanked and underbanked populations that traditional finance often left behind. For a while, Ripple was the darling of both the tech and finance worlds. It inked partnerships with major banks and payment processors in regions from Southeast Asia to the Middle East. Its executives spoke at global conferences about the dawn of an Internet of Value, a world where value could move as freely as email. Monica Long, now Ripple's president, described it succinctly: "We set out to bridge the gap between traditional finance and the emerging world of crypto, making cross-border payments seamless and accessible to all." But then, in December of the year 2020, everything changed. The United States Securities and Exchange Commission, the nation's top financial watchdog, filed a lawsuit against Ripple Labs, alleging that its sales of XRP constituted an unregistered securities offering. The bombshell accusation set off a chain reaction. Overnight, XRP's value plunged. Major cryptocurrency exchanges delisted XRP, and Ripple's carefully cultivated partnerships with banks and payment providers came under threat. Uncertainty blanketed the industry, sending a chill through investors, entrepreneurs, and innovators alike. What followed was more than 4 years of legal wrangling, arguments, and speculation. On one side, the SEC insisted that Ripple had flouted securities laws, selling XRP to institutional investors without the required disclosures and investor protections. On the other, Ripple argued that XRP was not a security but a digital asset, akin to Bitcoin or Ether, used as a utility token within a decentralized network. The stakes were enormous. If the court sided with the SEC, it could set a precedent that threatened not only Ripple but dozens of other blockchain projects striving to innovate in the United States. Despite the never-ending legal drama, Ripple pressed forward. The company doubled down on its mission, expanding its reach especially in Asia and the Middle East. In Japan, for example, its subsidiary SBI Ripple Asia forged partnerships to facilitate instant remittances, while in the Philippines and Malaysia, RippleNet helped migrant workers send money home more efficiently. The company also began exploring new frontiers, such as decentralized finance, non-fungible tokens, and even collaborations with central banks developing digital currencies. Monica Long, reflecting on the company's resilience, put it best: "Our mission has always been to enable an internet of value, and we were not going to let legal uncertainty derail that vision." Then came the turning point. In June of the year 2025, after years of filings, hearings, failed settlement talks, and public debates, United States District Judge Analisa Torres issued a decisive ruling. She rejected a proposed joint settlement from Ripple and the SEC that would have reduced Ripple's penalty to $50 million and removed the permanent ban on institutional XRP sales. Instead, Judge Torres stood firm, leaving the original $125 million penalty and injunction in place. The message was clear: the court would not be swayed without truly exceptional circumstances. Ripple now faced a stark choice: continue a costly and uncertain legal fight, or accept the judgment, pay the penalty, and move forward. The crypto community held its breath. On social media, a poll of Ripple's vast and passionate online following showed nearly 3/4, about 74%, believed the company would choose to end the case rather than drag it out further. Their intuition proved correct. CEO Brad Garlinghouse announced that Ripple was dropping its appeal. The long legal saga was, at last, over. But the resolution was bittersweet. While the case was closed, the court left intact its prior finding. Ripple's institutional sales of XRP still constituted a likely ongoing violation of securities laws. The permanent injunction remained, and the $100+ million penalty loomed large over Ripple's balance sheet. For many, it was not a clean victory, but rather the closing of one chapter and the uncertain start of another. Yet in the world of digital assets, even a partial resolution can be transformative. As Wall Street analyst Linda Jones noted, the end of this lawsuit finally removes a major overhang, making XRP more attractive to institutional investors. For many large financial players, legal uncertainty is a deal-breaker. Now, at least, some of that fog has lifted. But can Ripple truly move forward? The path is both promising and perilous. The market's initial response was a cautious optimism. Some predicted a surge in XRP adoption, especially in regions where Ripple's technology had already gained traction. Others warned that the court's injunction and the hefty penalty were stark reminders that regulatory scrutiny was far from over. Around the globe, governments and central banks are tightening their grip on cryptocurrencies, seeking to balance innovation with investor protection and anti-money laundering controls. David Schwartz, Ripple's chief technology officer and one of the original architects of the XRP ledger, offered a measured perspective. Innovation always races ahead of regulation, but we are committed to working with policymakers, not around them. Our engagement with regulators has only deepened through this process. So, what does the future hold for Ripple? With the lawsuit behind it, the company has signaled a strategic pivot, one that goes far beyond simply making a profit. In its 2024 impact report, Ripple announced a commitment of $200 million towards social initiatives focused on financial inclusion. This is not just corporate philanthropy, it's a deliberate effort to use blockchain technology to empower the unbanked and underserved, helping people in emerging markets access basic financial services that many in the developed world take for granted. Central to this new phase is Ripple's work on stablecoins. The company's recently launched RLUSD stablecoin is designed to support cross-border aid, disaster relief, and humanitarian assistance, offering unprecedented speed and transparency. In the chaotic aftermath of natural disasters or political crises, getting funds to those in need quickly can be a matter of life and death. RLUSD aims to bridge that gap, allowing nonprofits and governments to deploy resources without waiting days for international wire transfers to clear. Ripple is also forging new alliances to expand its reach. Its partnership with Archax, a regulated digital asset exchange in the United Kingdom, brings real-world assets like tokenized real estate, commodities, and even fine art onto the XRP ledger. This move unlocks new possibilities for instant trading, fractional ownership, and global liquidity. Imagine a future where you can invest in a piece of London real estate or a kilogram of gold, all through a secure, transparent blockchain transaction, no matter where you are in the world. In Japan, Ripple's collaboration with SBI Ripple Asia is already streamlining remittances, helping Filipino workers in Tokyo send money home in seconds rather than days. In the Asia-Pacific region, Ripple's alliance with Tranglo is making cross-border payments faster and more affordable, helping small businesses and families alike. And across the Atlantic, Ripple is a founding member of the Digital Pound Foundation, working with regulators and industry leaders to shape the future of digital currencies in the United Kingdom. The company's ambitions don't stop there. Ripple is actively exploring integration with the Federal Reserve's FedNow service in the United States, which promises to make domestic payments instantaneous. If successful, this could set a new standard for how money moves within and across national borders, blending the speed of crypto with the trust and reach of traditional finance. Behind the scenes, Ripple's acquisition of Mataco in May of 2023 for $250 million has bolstered its enterprise crypto service offerings, providing secure custody solutions for institutional clients. The company is also piloting a novel lending protocol on the XRP ledger, enabling users to lend and borrow XRP directly, thus enhancing the platform's decentralized finance, or DeFi, capabilities. These innovations position Ripple at the forefront of the next wave of blockchain utility, well beyond its original focus on payments. There is even talk among analysts of a potential XRP exchange-traded fund, an ETF, being approved in the United States. Such a development would open the doors to waves of institutional capital, as pension funds, mutual funds, and endowments often require the regulatory clarity and risk management that ETFs provide. While approval is not guaranteed, The very discussion highlights how far XRP has come since the dark days of delisting and legal limbo. But for all the promise, the risks remain real. Regulatory headwinds are not going away. In fact, as the crypto industry matures, scrutiny is likely to intensify. The court's injunction and penalty underscore the need for rigorous compliance, robust risk management, and continuous engagement with policymakers. Ripple's strategy reflects this reality, balancing bold innovation with a commitment to playing by the rules. Industry experts are divided on what the next chapter holds. Ryan Selkis, the CEO of Masari, points to Ripple's diversified approach, its expansion into DeFi, real-world asset tokenization, and central bank digital currency collaborations, as a blueprint for long-term resilience. Ripple understands that to survive and lead in this space, you can't put all your eggs in one basket. Their partnerships with regulators and financial institutions give them an edge that pure crypto plays often lack. Ron Hammond, a digital policy expert, emphasizes the importance of Ripple's engagement with lawmakers. The crypto industry needs companies willing to sit at the table with regulators and help shape a positive framework. Ripple's willingness to do that sets a precedent for responsible innovation. So, what does all this mean for you, the viewer? Whether you're an investor, entrepreneur, technologist, or simply someone curious about the future of money, there are several key lessons to draw from the Ripple saga. First and foremost, regulatory clarity is critical. The uncertainty that hung over Ripple for nearly 5 years was not just a legal headache. It stifled innovation, scared off partners, and hurt consumers. As the crypto industry matures, the need for clear, consistent rules has never been greater. Keep an eye on how Ripple and other companies navigate this new landscape. Their successes and missteps will shape the industry's path forward. Second, watch for how Ripple leverages its post-lawsuit momentum. The company's renewed focus on partnerships, DeFi applications, and mainstream financial integrations could spark the next wave of blockchain adoption. Early awareness and understanding of these trends can give you a competitive edge, whether you're considering investments or building your own projects. Third, consider the power of resilience. Ripple's ability to weather almost 5 years of legal storms without losing sight of its mission or abandoning its customers offers a masterclass in perseverance. In any disruptive industry, whether it's crypto, artificial intelligence, or renewable energy, staying power is often the difference between success and irrelevance. And finally, remember that the story is far from over. The ending of the SEC lawsuit is not the end of Ripple's journey. Rather, it marks the beginning of a new phase, one filled with both promise and peril. The company's choices in the coming months and years will determine whether it becomes a cornerstone of the new Internet of Value or just another footnote in the history of financial technology. Here's a detail you may not have heard elsewhere. Ripple's quiet acquisition of more than 30% of MoneyGram shares is not just a financial investment. It's a strategic move that could give Ripple unprecedented influence in the global remittance market. Imagine a world where sending money abroad is as simple as sending a text message, with near zero fees and instant settlement. That future is closer than you think, and Ripple is determined to make it reality. To put all this in perspective, let's consider a few numbers. The cross-border payments market today is worth more than $150 trillion globally. The World Bank estimates that remittance flows to low- and middle-income countries alone exceeded $600 billion in the year 2023. Yet, the average cost of sending $200 internationally is still around 6%. Meaning billions of dollars are lost to fees each year. If Ripple's technology can reduce even a fraction of that friction, the impact on global development, entrepreneurship, and poverty alleviation could be profound. And the race is on. Competitors like Stellar, Swift's GPI, and emerging DeFi platforms are all vying for a piece of this lucrative market. Central banks are piloting their own digital currencies, and new regulations are being drafted in capitals from Brussels to Beijing. Ripple's ability to stay ahead by innovating, partnering, and advocating will determine whether it leads the next phase of digital finance or is overtaken by nimbler rivals. So, can Ripple overcome its challenges and truly redefine the global financial landscape? The answer, based on everything we've seen, is a cautious but optimistic yes. The end of the SEC lawsuit removes a major obstacle, but the road ahead will require discipline, vision, and relentless execution. With a diversified strategy, a deep commitment to compliance, and a growing web of partnerships spanning continents and sectors, Ripple is positioned not just to survive, but to lead. If you found these insights valuable, make sure to subscribe, hit the like button, and let us know in the comments. Do you believe Ripple's vision will finally reshape global finance, or will regulatory hurdles hold it back? Your perspective helps us shape our next story. Thanks for watching, and stay tuned for more.